Y'all are slow with your turn. Oh, we had the dramatic
Indeed.
turn from Royce.
He
I
went full
should have
Madden on
said I didn't give a speed. I did not give a speed. But of course, Royce with the dramatic
Welcome.
turn. Yep.
Well,
Welcome to our show.
him. We got blue
All right.
steel.
That's right. We have all red in the background. Guess what that means? I mean, basically, if there was a color for flat, that's what we should have. But it's just a little bit in the red after being green most of the day. We started off green. Media says, "Hey, look at jobs for January. Look, isn't that wonderful?" And then it turns out that the jobs they reported in January were basically the total number from last year, which got revised down. But anyway, we can talk about that later. We have other things that are happening in the markets. So I'm Darin, and to my or up in your top right hand corner is Daniel. Wave, Daniel. You and your OnlyFan. Thank you. Very good. And in bottom left we have Josh. I'll just say JPM. I won't even say the bank name. And in the bottom right is Royce Wells. He is our fearless leader.
I don't know about fearless, but
Well, true. He's certainly been tried and tested. That's for sure. Once a day, twice a day. I don't know. We lose count.
and he's like, this might be Red Bull, but it might be
All right.
something else.
What goes well with Red Bull? Okay, so let's move on. We've got let me give the disclosure.
Lots of potatoes.
Potatoes, yes. And what can you make from potatoes?
Some very old.
You Russian.
potatoes.
All right, let's move on here. I'm going to go ahead and give the
Water.
disclosure.
It means water.
Potato water, yes. That's how you soften them up, right? All right, let's go. We are and people. Anyway,
We are what?
we're not financial advisors. This is not financial advice. This information is provided solely for educational and entertainment purposes only. Please always consult an investment professional before making any financial decisions. Are you entertained? All right, I kind of gave a brief on a specific thing about the markets, but that is kind of what happened today. It was a roller coaster, went way up to the top of the roller coaster and went woo down, and then it ended up right basically where it started. It's pretty algorithmic. You want to talk about Bitcoin off the bat, Daniel? Is that
we can.
okay? I mean, yeah, that's part of the market. I mean, what's happening in the market. So we got Bitcoin and gold. But let me, you know what? I need to set the table with the numbers. So then people, it'll give some substance to what we're saying here. So Dow Jones 5121. It did pass 50 over the week. But today it was down 0.13. S&P 500 was down 0.01 at 69.41. NASDAQ was 23.066, and that's a negative 0.16. I mean, are they trying to make everything 57,024? Is that what they're going for? I don't know. But let's go on. The dollar is 96.81. We got crude at right under $65. Gold is up to 51.04 when everybody said it was done. Silver is back up to 83.94 when everybody said it was done. Copper is right at $6 because I have to throw that one in now, especially if we're going to start building lots of things. The 10-year is the 4.173 and up. 30-year is 4.81 and up. Bitcoin 68,261, which is down. Ethereum is down to 1981. That was a good year. XRP is down to 1.39. We've got the 10-year. I already said that. So yeah, that gets us all caught up. It did go down to under 66 today. Bitcoin did, and then it came back up to 68,261. So that kind of sets the table, Daniel. What do you want to add on to that?
Yeah, so first I want to give myself my own flowers because in my Substack, I called the exact pocket of like 62,000 last week for Bitcoin. And to be fair, I did not think it was
get there.
I didn't think it was going to get there this quick. Like I was like, oh, it'll get there, but I thought it could be months, right? Like it can take Bitcoin a year to bottom, right? Not normally 4 months into its bear market cycle. So I was a bit surprised on how quickly it got to that zone, but not that it hit there. But I've been on Twitter quite a bit, and when you look at the way that Bitcoin is trading, a lot of people are overlaying the IGV, which is the ETF that tracks all the software companies. And for the last 2 years, if you overlay those two, the Bitcoin and IGV, they almost trade exactly the same. And so there's a lot of speculation that in the market right now that this, software and Bitcoin trade, as they're, kind of on the downtrend, are not actually, we'll say like for like market reasons trading down, but more of liquidity and leverage reasons. Being part of the same basket of trades, whether it was hedge funds, having some yen carry exposure, and they were all in, Bitcoin software, leverage trades that were doing well for the longest time, and now they're getting the tap on the shoulder and they have to deleverage those trades, and that's where the market was for those. And whether that is true or not, institutions have been net sellers of the ETFs this year. They've already pulled out $2 billion from the Bitcoin ETFs and $5 billion over the last 3 months. And the market cap of Bitcoin is down 60 billion from its all-time high, which isn't the biggest, like net drawdown, but it is down 50%. And so, Royce, with the bans, where do you see the potential cycle low in Bitcoin? Because normally, from the traditional perspective, it takes Bitcoin a year to bottom, right? When it's in its bear market cycle. And we hit a potential bottom in 4 months. So is the cycle going to change this time, or, do we still have more pain to come?
I say there's more pain, but I love pain. I'm not perma bear, but yeah, bring on the pain.
I was thinking about this the other day. Psychologically, I'm a perma bear, but my trading would reflect completely otherwise.
Equilibrium.
Probably a good thing. As Royce would say, markets are made to go up and to the right.
There are some personalities on YouTube that say 45K. We'll have to see.
I'm going to show you. Do you guys actually want to see what I marked up? Or no?
Sure, let me move to it. Hang on.
Yeah.
We'll move to it over here. There we go.
See that line? This line was drawn all the way over here, and we almost hit it perfectly. The problem is that's the first. If we actually break below our current standings and stay there, the next line, that line gets a little scary. So if it does continue going down, there's a chance that we might see Bitcoin back at $6,000 to $7,000 over the next year or so, if it continues to fall this quickly. So, hey, take that as you will.
I will say that the analysts that I've followed, the analysts I followed showed the wedge, and it finally broke that wedge from a long time ago, and he said it was headed down to 45. So,
hey, remember it was 17,000 2 years ago.
Yeah, that's crazy to think, isn't it?
Mm-hmm. So 7,000, not that bad, right? Right.
It's a long game, right?
Exactly.
I would say that's a pretty good accumulation channel. You go to 7,000. Even 45, you just keep accumulating all the way down. Accumulate the falling knife. Not financial advisors. Yen. Talk yen.
This is a commodity. This is not a security. So
yeah. Talk about it all day.
We're in the clear.
Yeah, that's right.
Let's talk about yen and what the rates going to 1.0 maybe with the yen. Yeah. Potato juice. So you want to set that up, Daniel? What is Japanese manipulating, and what are they doing?
Yeah, I mean, pretty much they're going from their zero or negative interest rate environment to, you know, trying to bring some kind of yield back to their bonds, and that is ultimately rising their the cost of their currency. And we've seen that, you know, have a pretty big impact with the fall of the dollar as of late. And, you know, Josh probably knows more about this, but the, you know, like I was saying before, the speculation is that when it comes to the yen carry trade, that it takes a while for it to unwind, right? And so we're continuing to see an unwind through, you know, well, it's potentially this Bitcoin trade, it's maybe the software trade, and as the news, you know, with Claude releasing co-work assistant, kind of spooking those markets, forcing the liquidation of some of those trades, with ultimately the, you know, yen being one of the biggest stressors on it.
Isn't a lot of our debt with Japan?
No,
Like they own it.
No,
no.
I think China is the largest holder of our debt.
China.
And it's only at 5%. So yeah,
Okay.
don't let them scare you.
I mean, what does that mean though? If Japan gets to 1%, what does that mean for the dollar and for just
Nothing.
general nothing?
Absolutely
Nothing burger?
Nothing.
Just
giant nothing.
Okay. Just people not borrowing or trading with them
Why
as far as
would that? Why would that be
monetarily like they used to? It used to be free money. Now it's not. So they're going to go somewhere else. I mean,
they're already going somewhere else. You just don't see it.
right. Yeah. Gotcha.
So
Okay,
they're
Josh?
carrying all of the bond stuff into the crypto market, quite literally. Bonds give a 12% yield, traditionally yearly, and the USDT, USDC, in the crypto space is roughly doing the exact same thing. So they moved all the treasuries into there, and the yen is actually heavily accepting XRP and other forms of crypto and RL, USD, to basically offset their negative interest rate. So they're not just moving out of the yen, they're moving into the crypto market.
Okay. Any comments there, Banker, before we move on?
No, I'm actually kind of interested to see, especially with that. I think it's Takaichi is who the new prime minister came in Japan, and they got a completely, a right-wing sweep. So there's going to be, massive overhaul. They're going to have all of the supermajority in whatever voting processes they need. So she's pretty much going to get, anything and everything that she wants. I haven't really dove that far into her, fiscal policy. So I don't know how it's really going to affect the carry trade. But if we go back, you were talking about the carry trade takes years to unwind, and it has been unwinding for years. And we, to Royce's point, we are seeing that money, that outflow going into other spots. And I do think, even though Royce was saying that we could see Bitcoin, going lower, I think a lot of this is actually flowing back into Bitcoin. They push the price low enough now that I think people can start buying in, and it's going to kind of, offset that carry trade, or at least the liquidity issues that brought up.
I agree 100% there.
Cool. So I kind of hinted toward it at the beginning, but the next subject is jobs, and whatever the BLS might have to say. So I'll let you quickly go through this, Daniel, and we'll move on to the next one because it's just.
All right, Darin. No comments. Just let me state the facts. Okay.
Only facts, man.
Facts. Yeah. Okay.
I'll caveat it. All right. So layoffs in January rose 118% year over year, the worst since January 2009, which is a big scary, but it's not actually that bad when you look at the overall picture. Job openings declined in December for the third straight month, lowest since September 2020. And initial jobless claims rose to their highest levels in 2 months, but that is likely due to the winter storms that were happening around the country. So when you look at the whole picture, there's no like major stressor, right? There's no like major jump in employment. But when you look at everything, you know, over kind of like the last 2-3 years on the job front, things are kind of like stagnating or like slowly declining, which is like, you know, there, like I said, there's no clear stressor, but it's kind of like, all right, well, like we're not growing, but we're not, you know, like jobs aren't dropping off a cliff. So it's kind of like a precarious spot, because normally we, you know, you typically see it go one way or another.
But is this a typical market though? I mean, you have machines which replacing people, and so the unemployment rate should go up as they replace with robots, right? And machines and automation and efficiency should go up. But that also means you're going to have people that are losing jobs. So is the stressor actually AI? Is the stressor actually the fact that we're rolling out more automation?
I like maybe so my thing with the AI trade is like, or not AI trade, but like the AI stressor of like the market is that I have some friends that work at, you know, well, the Mag 7, right? And none of them are using AI in the company. And they're supposed to be the biggest AI companies, right? And I'm not saying like, you know, I don't know people that work in a warehouse, right? So I don't know if people are being replaced by robots. Like I can't, like, you know, it's very factual that I think a lot of these companies are honestly just kind of trimming fat from having excessive hiring in 2020. But like, I don't think people are truly being replaced by AI yet in any meaningful way. I think companies are maybe not hiring in preparation for that. But could that be a stressor coming up? Like that, I don't disagree with. But right now, it's, you know, I don't know, a bit precarious in my opinion.
And magically, unemployment went down by 0.1.
See?
I mean,
Somehow, some way.
There is one thing that's kind of being underreported here, and that's the fact that we just yeeted a lot of non-English speaking people out of the country. So if you
sorry, was that a technical term? Yeeted?
Yes, that is the official. It's in the dictionary. So that's what, like, that's to me what's kind of distorting a lot of these job numbers. Like we keep having these historically bad job numbers. Like, you know, I think Darin was pointing out the fact that we added 181 jobs in 2025, but magically in January, we mysteriously created 130,000 jobs in very specific and technical, you know, very specific and technical. Like I think it was healthcare and like hospitality and things that require certifications or degrees, like things that it's not, you know, we're not replacing the manual workforce. And that's what one thing that, you know, AI is kind of offsetting is we're getting a lot of these people that, you know, the people that were working for, you know, $6, $7, $8 an hour doing meaningless like data input or whatever is rapidly being replaced by AI. So you can have weaker labor numbers, but still not have the stressor of unemployment going in one direction or the other, because there may not be a job demand because you know, everybody that we just
mentioned this, they've been
gently got rid of.
Well, okay, wait.
Was that a soft landing? Was that our soft landing for all those people who want to be employed?
I know it's pretty rough to portion.
It's I know that was.
I'm gonna have to use that at my next firing event. I'm gonna try to give you a soft landing.
Event.
Gonna be brutal.
I have two questions though. One is because I assume, Josh, you're talking about the deportation of illegal immigrants. Mm-hmm. Are they included in?
Well, half of them were
employment numbers. Well,
it shouldn't be.
No, but they're also, they are reported in the like jobless claims and like the hiring. So you may not see them like, you know, hey, we hired on somebody. Like there's an official documentation that this person was hired on. But at the same time, like that's what's causing the difference between, I guess what I'm trying to say is that's what's causing the difference between like these jobless claim numbers, these actual like hiring on numbers. And at the same time, we're still maintaining that unemployment rate, which I think went down by like 0.2%.
Yeah. Okay.
Anything can be squeezed into whatever it is they needed to say every month. You didn't mention the delinquency rates, which I do think is one of those things that's out there that is really going to be bigger and bigger, because that does affect the big guys. Because we all know that and you talk about the K-shaped recovery, and that's that the top elites are still, and even the news is saying it now, is maintaining the economy. Yeah, and it's the rest of the 80% are struggling, and delinquencies, and then all this easy pay stuff is going to come back, and it's going to actually affect the big guys who run these places that loan the money to them. So eventually they have to take care of that at some point. But it's my favorite, probably, I guess, philosophy of the last 4 years is extend and pretend. We're going to extend this problem we have longer, sweep it under the rug, and just pretend everything's okay. So what were you going to say about the delinquency rates? You have an update on that?
Yeah, so I mean, I have a few thoughts on this, and it kind of ties into the job thing that we were just talking about as well. But the stats are retail sales were flat in December, which is not good for a holiday month, when they were expected to increase by 0.4%, which is a pretty small and achievable number. And the delinquency rates rose to 4.8% of all outstanding U.S. like household debt, which is the highest since 2017. So, highest number that we've seen in quite a while. Now, the New York Fed showed that the biggest driver of this was mortgage delinquency. And if you guys have followed like the Tricolor story at all, which was like the automotive loans that were essentially given to illegal immigrants, Tricolor being the 3 colors of the Mexican flag. And a lot of this kind of delinquency, I'm not making that up. That's like legitimately, it's like, that was their business. When you look at a lot of like these delinquency rates, like there's been, I think it was that rents were coming down in certain areas because they couldn't rent the apartments. And a lot of it kind of ties back to what Josh was saying of, people being forced to leave the country. And when you kind of create that hole, and that specific hole will more or less never, at least immediately, be filled by, Americans, it's going to make some of these numbers look bad. And I don't want to say like worse than they really are, because delinquency rates are real, and not being able to fill apartments are real. That does, ultimately that affects, the loans that those landlords have and whatnot. Now, the interesting thing is that the K-shaped economy is becoming so split that even companies like Dollar Tree, which I didn't know this, they have 9,000 stores across the US. That's insane. They're trying to upscale, and they just opened their 9,000th store next to a Louis Vuitton to try to attract a higher end customer, which I think is ridiculous. Like, I don't, I've been in.
I'm sure Louis like,
yeah, they're like, right. They like look over and they're like, the neighborhood's going to shit.
Hey, at least they could bring him over in the same shipments from China. Both stores.
Yeah. But I mean, if you ever taken a trip through Arkansas, like it makes sense that there's 9,000 Dollar Tree stores, because I swear there's one every 4 miles.
Dollar General and all that stuff, which I worked for a little bit. We need to move quickly for Royce to do the channels for, because we have to show the scoreboard. We'll come back and finish it up, the 3 of us. And I'm not saying it's just because I won, but I did win last week, which gives us,
right, of course,
which gives Josh is at 7, And the rest of us are at 3 now, which makes for 5 weeks left. So it's still open, but
so it's us versus Josh, is what I heard. 9
pretty
versus
much,
7.
kind of. But
That's
I'm
fine with
pulling
me.
for the apes still, though. We clinched the whole season
did
already.
You hear how bad he was talking about you pre-show?
Nope, not going there.
Only a little bit. I gave him his flowers.
Here's the pull your map back up. We're going to do kind of take a look at U. That's 4 U's, and that is the stock.
Guy.
Yep.
I don't want to.
Yep.
Can't make it.
All right, Oprah giving out cars.
You. Energy fueling.
Oh, you want some uranium?
Everybody get done. You. Hey.
Well, that's the stock for the next week.
All right. Oh my God.
Yeah.
You're all right.
Oh, you got O to go with the U.
All right. This is where we are. All right. It has an $18 to $24 range. So about $1.50 a piece.
Nailed it.
$1.50 a piece. That's 6. Okay. Yeah, I guess you'll talk about it later, but I feel that we have the dollar signs. We're heading downward. So let me get that.
Do your analysis, sir. Let us know where you think it's going.
Well, I'm not going to say it out loud, but 18 to 1950, 1950 to 21, 21 to 2250, and 2250 to 24. So I'm going to go with 1950 to 21.
1950 to 21. All right.
And then give it to Josh next.
I'll take right under that.
Yeah, I had a feeling. That's exactly what I thought.
Excellent.
And Royce saying excellent. What's up?
Excellent. All right. I'm going to take that 21 to 2250. Yeah.
Okay. And you see
So
the note down there, by the way?
I'm winning. And it only has to move a couple pennies to put solidly in Daniel's court.
True. And you see that Daniel's company there is the one with the note there that they have initiated coverage of energy fuels with a buy rating. And you see their price target, which means somewhere in the next year.
It's gonna go up.
That means it's going down. So we're looking good.
Yikes.
Whatever they say is try to get retail to go with them. All right.
All right, guys.
Let's get back to here.
Enjoy it.
Royce, you got to go, right?
Yes, sir. I'm out. Enjoy it. May
5 o'clock somewhere.
Win.
That's
Josh,
here.
don't let me down. You got to win this one, Josh.
I feel pretty good about this one. So
okay.
Lee, man. All right.
All right.
I thought about taking the bottom.
I know I'm not gonna win, just because I never win on a weekly time frame. But all I'm gonna say is look for this to develop a cup and handle, and you'll be sorry you didn't buy it.
I mean, that's a lot of the rare earths are doing the same pattern right now. But
this one has a way better pattern than a lot of them because it went back up to its all-time high and it's only retraced 50%, and it's finding support. So short term, I am not going to say I'm right, but give it 3 months and you'll
down the road he will come on like he did the Bitcoin call and say, "See."
The problem is, to me, I mean, you might be right about that. The problem I see is it looks like a lot of consolidation in this area.
Right.
We're going to see. It's kind of like, depending on which time frame you jump across, we're looking at. I mean, it's just going to waffle back and forth for months, but you might be right long term.
But look at all.
I think it might not until, let's say, a month, half month. It might not hit that all-time kind of high level again to then break out, right? Not going to say I know it's going to happen in 2 weeks, but I will tell you in 3 months.
I mean, it's got a pretty hard ceiling at like 25.50 right now, or 26. But that ceiling will move over the next few months.
I tried to pull it up, but I forgot Royce had disconnected, so I can't pull it up. Well, let's go to software getting crushed, and then we'll hop out of here. You can go ahead and just present that for us, Daniel, and we'll talk about it. We haven't really heard a lot from Josh, but we have heard some, but see what your input is on the software.
Well, here we'll finish with the K-shaped thing I have that also kind of rolls into software a little bit.
Okay.
So, presented kind of all this not so great like consumer data, right? And if you look at the market, you can't argue that a lot of what the AI trade is rolling over, right? Or at least consolidating, stagnant, whatever. And when you look at software, it's definitely down. It's down like 30% from its highs, which is like quite a bit for a lot of those companies that were, quite darlings of the market the last few years. And so the question becomes if this retail data starts to get kind of priced into the market, which consumer staples and discretionaries and whatnot have been trading quite well as the market rotates. What is going to be the thing that can continue to hold up the market? Because the only other thing would be like base materials, but base materials are largely influenced by the price of the dollar and foreign exchange rates, because we don't do most of those processes or minings here. So that's kind of like a far out factor, and it's like not gonna support the whole market.
Well, but does software really? Is software really the thing propping up the market, or is it tech? Because those two things are.
Well, so I'm saying you have the AI like software has rolled over. You're seeing AI consolidating, looking like it's going to roll over, right? So it's like, and then like those make up a very large part of the market. And I'm not saying the other parts are like falling, but they're not necessarily like rising exponentially. And part of it that is rising is we're now, at least in this particular data, showing weakness.
I think it's just more exclusive to software, like specifically. I don't think it's really like tech as a whole or anything like that, because if you overlay a lot of the tech charts, like and you look at, I was looking at what is it you had earlier, which, hang on, let me look at the ticker. The IGV. If you overlay that, like that's actually been falling off for the past year or so. Like software has been in a gradual decline for quite a while. Like, but if we're looking at the big tech or AI, like those have been they're just a little bit of tapering off now. Whereas
look at the MAGS ETF. I don't think you can look at that price action and say it's bullish.
Aren't they trying to push cloud now again?
So 2007, Darin.
I know, but I think that's what they're trying to push again. That is needed for all the build out of the centers.
All right. So are you talking about MAG specifically?
Yeah, it's the MAG 7 ETF.
It looks very bouncy to me.
One might say it does not look like it's about to rip up into the right. And they make up 35% of the market.
God, I wish Royce was here, because he would argue with you about this one.
The story in the media.
If you look at the arbitrage charts, it is in a like surprise. I'm not going to say that it's going to bounce hard, but I could see it creeping back up to the 70 range before coming back down. I mean, you got second deviation sitting right at like 770, 55, and then we're right at an inflection point at like literally right here on the money. And then if you go to like the 5-minute chart, it's like we're getting bullish breakers and everything. Yeah, this looks pretty bouncy. I mean, in the near term. Now, I'm not talking about, I don't know what's going to happen over the next, 6 months. But if you look
Josh,
at
I know what's going to happen. So let me tell you. Just kidding.
Okay. Here we go. This will be good.
All I'll say is pull up the intermediate band. It doesn't look too bullish.
Well, hold on. Before you guys go too much into charts, I can't share the charts.
The short term.
We can't share the charts, so let's try not to reference
okay.
charts right now. So, and lines and bands and indicators.
For it that Daniel
Right. Right. But like you mentioned in your notes, though, Daniel, it's the media is trying to push the fact that AI is making software, rendering it useless. I guess. I mean, if you go all the way with the pendulum, but because anybody can get on Chat GPT and write software instead of buying it, I guess is the idea behind that. I don't know.
Well, it's true. I mean, like software engineers, coders, things like that. Guys coming out of college cannot find jobs.
Right.
I mean, the whole market has been soaked up by AI. Like these bots, and bots are getting rapidly better. Like
right.
They're getting exponentially better and faster and more efficient at a rate that we did not really predict. Like we didn't really see coming. It's getting much faster, much quicker. And I think it's taken a little bit of everybody by surprise, which is some of the reason that we're getting this, software sell-off. Right.
And I think Musk, this is one of the things he was scared about too, but it is that we just released the beast too early. But these companies now don't have to go buy the software. So that's going to be a hit on their sales. So that's the whole idea behind or what the media is saying. So they actually might be talking truth this for once.
Yeah, I mean, I wouldn't give them that much credit, but okay.
Yeah, exactly. I know. I know. All right. Anything else you guys want to bring up before we close the show?
I mean, but shout out to
we placed a 6-month bet on this.
Shout out to Daniel on the Substack. Like, I was questioning what he said about backing the truck up at like BTC at 62, 65. And I mean, if you look at that arbitrage bands on like the daily, got that big green cross right at like 62, and backing up the truck was absolutely the right move. So
shout out to Daniel for calling out what Royce created, which is the bands. Yeah. But is there a way, Daniel, that people can get to your Substack? Can you tell people?
I don't even know the name of it, which is funny.
But Substack is a app, right, that you can download, and then they just have to look for your specific one.
Yeah, it's Pips.
But if you just look up Pips, is that how it comes up? Oh, yeah, it's just Pips.
Mm-hmm.
That's pretty easy. 4 letters.
Look up Pips. We're there.
PIPS on Arbitrage or on Substack. Yep. That's how you get to what he just called out. Again, he's not a financial advisor, but he certainly analyzes and gets things right based off of our tools that we have. But that's all we are, is educational and informative and entertainment, but not advisors. All right. Well, let's close it on that then, and we'll see what happens within the next week. I mean, the way things are going, anything can happen at any time as we head towards the end of February here. And there's just a lot of craziness that could be building up, and finally, extend and pretend will become now and happening. All right, guys. We'll see you next week.
See you guys.
Bye.